Hello and welcome into the KE Report. Chad and Corey here as your host, and today we're getting an update from Vista Gold Corp. Vista Gold is traded on the NYSE American and the TSX under the same ticker, VGZ. And we are talking today with the president and CEO of Vista Gold, Fred Earnest. And Fred, we had you on the show a couple months back in June, and we were talking about at the time you had 9.5 million ounces of gold. You've now upgraded that in a recent economic study and resource update to the market to 10.6 million ounces of gold. And so you've upsized the deposit size at your Mt Todd project in Australia, but you've also wrapped some new economics around this. And I feel like this is a game changer for the company. And we're going to dig into some of those details here. You've already had a feasibility study out since 2022, and then you updated the economics back in 2024 last year. But this new study really is a game changer for the company and how it reframes the capex and the size of the plant and the approach. And it's bringing in interest not just from investors, but also from potential strategics. But just before we get into all that, just remind people of the deposit itself that we'll be talking about at Mt Todd and these 10.6 million ounces of gold equivalent.
Yeah, thanks, Shad. It's great to be back on your show. The Mt Todd Gold Project is located in the Northern Territory of Australia, about 250 kilometers south of Darwin, 30 minutes north of Catherine, and about 10 kilometers off the east of the Stuart Highway. As you indicated, it's a very large deposit. It's one of Australia's largest undeveloped gold projects. It's very well advanced. We've held it for quite some time and have completed an extensive amount of work on the project. As you've indicated, July 29th, we announced the results of a new feasibility study at a different scale, and really excited to talk about the results of that study.
Let's dive into that study, and more so what changed here, because even the headline says this is a resized feasibility study. One of the biggest concerns, I think, from shareholders was the capex in the prior studies that was over $1 billion. Now you've brought that initial capex to under 500 million, actually 425 million in that feasibility study. Talk to us about this strategy here of reworking this project to, in a way, make it smaller, more digestible capex.
Yeah, so we've done a lot of things different in this new study. In fact, I would say it represents a paradigm shift in the development strategy for Mt Todd. You've mentioned the scale. Previously, we'd evaluated Mt Todd, given the size of the deposit, at 50,000 tons per day or 17.5 million tons per annum. This new study evaluates an initial project at a scale of 15,000 tons per day or 5.3 million tons per annum. So changing the size of the project was one of the changes. We brought in some new consultants, a new team to help us with this study. The lead for the study is GR Engineering Services, or GRES. They're based in Perth, and they have a tremendous track record, a wealth of experience in designing, building, and delivering gold projects of this scale in Western Australia. And so we've made some changes in the way we think about the project. One, we've incorporated contract mining, the very common practice in Australia. It's one of the things that's contributed to lower capex, although we all recognize that it does have an impact on the operating costs. We've continued the previously evaluated scenario of having a third party own, operate, and generate power for us and sell it to us over the fence. We've changed the design principles. Previously, looking at a very large project, we designed the project based on design principles that would be very acceptable to the Newmonts and Barricks of the world. It would look just like one of their projects at that scale. Smaller gold projects in Australia are designed differently, and we've adopted what the Australians call fit-for-purpose design principles, and very much in line with the way many successful gold projects have been built in the last 8 years. So, that's another change. The other is that we've accepted that given current market conditions that we're not likely to have a community-based workforce. And we've allowed for a fly-in, fly-out work component with a permanent camp with workers coming from most likely Perth and maybe some parts in the southeastern part of the country. But these all represent some very significant changes to the project to make it more Australian. And I know that sounds funny to think that, well, you've had a project in Australia, but it's not been an Australian project. But, this is a huge shift, not just size, but design criteria, operating philosophy. I feel like we've hit the ball out of the park with this one.
Well, Fred, another change you've made and you highlight in the press release is that you're now really prioritizing grade over tons. And so you're looking for areas of the deposit that have that quicker payback, looking at the cutoff grade was raised from 0.35 grams per ton gold to 0.5 grams per ton gold. So that changes the quality of the ore that's going into the mill in this scenario. So maybe talk to that aspect of the project.
Yeah, thanks for bringing that up. That was another important change in the project. While our break-even cutoff grade continues to be well below the cutoff grade we're using, we did raise the cutoff grade for reserves to 0.5 grams per ton. And that has allowed us to raise the reserve grade from 0.77 grams per ton previously to 0.97 life of mine. And in fact, over the first 15 years of the project, if there's no expansion, the average grade of ore delivered to the plant will be 1.04 grams per ton. Now, we've not thrown away that lower grade material. In fact, we're going to stockpile about 70 million tons of material between 0.35 and 0.5 grams per ton in a corner of the waste rock dump in a place where it could be recovered at some future date and processed if the economics merit such. So prioritizing grade is another really important part of this study.
So, Fred, I guess the big question is, now that you've lowered capex, now that you're showing that this project makes a lot of money, especially at current prices, does it make it easier to get it funded or to bring in a partner?
Absolutely. I was earlier this month at Diggers and Dealers in Australia, the premier mining conference there. And as a result of being at that conference, we've already signed a couple of new confidentiality agreements. Does it make it easier to finance? Absolutely. 425 million compared to over $1 billion is a huge change. We've had early conversations with lenders in Australia, ranging from the Northern Australia Infrastructure Fund to banks and other sources of that kind of financing. Certainly, the project economics appeal to a pretty broad group of producers in Australia. It's a size that they can get their head around. 150,000 ounces is a very respectable gold producer in Australia, and it's opened the door to a lot of opportunities. Whether that's a joint venture with a mid-tier producer, or and this is a recognition that we have that there may be a company of that size that says we like the project, but it's just not our style. The joint venture things. At the right value, if the right intrinsic value is represented, we're open to a project level transaction, a corporate transaction. And then obviously at the other end of the spectrum is that we raise a little bit of money, build a team, and then raise the money that we need to build the project ourselves.
Well, Fred, just on that last point, if you were to go solo, I think a lot of people could see the synergies if you brought in a partner, or if the project had, the right offer on it, that it could be at a project level or company level transaction. But let's go with door number 3 there. If you were to go out on your own, maybe a year ago, people would have scoffed at that idea and said there's no way a junior company could raise over $1 billion, and they would be right. But now it's within the range of reason that you could actually do this on your own. So if we explore that a little bit further, I know you have Wheaton Precious Metals as a partner, and they wanted the first right of refusal if they were to do a stream on this. But talk about how you would build the capital stack. Would you be able to raise a certain amount of debt? Are there any funds from the government that would be able to be brought into the equation? Talk to us about door number 3 if you were to try to go it solo.
Yeah, that, and you're absolutely right in saying that, a year ago it was not an option. It just, no one in their right mind would have gone out and tried to finance a project of that scale, given our market cap. Today, it's a different story. At $425 million, on the debt side, there's a fund that's been created by the government, as I made reference to, the Northern Australia Infrastructure Fund, that is designed to encourage development across the northern part of the country. And mining in that area is included as one of the acceptable uses of those funds. And so that's relatively low cost, long tenure debt. There's been early conversations that they might be able to come to the table with as much as $100 million. You made reference to Wheaton Precious Metals. We entered into a royalty agreement with them a couple of years ago, and royalties aren't their main bread and butter. As you've indicated, they're a streaming company, and they did that because they see the value in Mt Todd, and they want to be a participant in the financing. The equity side, I think that there's a number of different ways that could come to pass, and perhaps one of them involves considering in Australia an ASX listing. But there's the numbers are actually down in the realm where they're quite manageable, and so we're starting to do early evaluations and look at options and look at what it would look like. At the same time, being very sensitive to dilution and the market's interest in this. Obviously, we're driven to create the most value we can for our shareholders with the least amount of risk. And certainly this new study is a tremendous de-risking exercise. And our strategy in the coming months is right now we're on a mission to make sure that everybody who could possibly have an interest, either as a strategic financial partner or as a strategic operational partner, understands what Mt Todd looks like today and what the economics are and what the tremendous opportunity is.
Let's take it one step further then. Whenever, let's say, you get financing put in place or even a partner comes in, what does the build time look like? How long would it take when, let's say, financing is arranged to start producing gold, some sort of revenue?
Yeah, GRES, who, as I mentioned, has considerable experience designing and building gold operations of this size in Western Australia, estimates that 27 months from the start of detailed engineering to the start of commissioning.
Well, Fred, I think we've talked about a lot in this interview as far as the different components coming together with the resource size growing, all the different changes from the prior feasibility to this feasibility study, the options that you have on the table as far as partnering up with a mid-tier or larger producer, a transaction where maybe somebody's interested in taking the project over, or the option where you can build it yourself. It seems like a reasonable build time, good assumptions in here. Anything else you want to leave investors with from a high level that distinguishes Vista Gold from other development stage companies? Anything else you want to leave investors with as far as the big picture vision?
Yeah, the one thing that we haven't really talked about, and I think it's important to put out there, is just what are the economics of the project now, and the leverage that the project enjoys. We used a $2,500 gold price as the basis for our economics, and that generated a project NPV5 of $1.1 billion with a nearly 28% IRR. If we run those numbers at a $3,300 gold price, they increase to an NPV5 of $2.2 billion and a nearly 45% internal rate of return. All-in sustaining costs are $1,450 for the first 15 years, $1,500 life of mine. We've not evaluated the expansion opportunity, but we've designed the project allowing space in the layouts, the general arrangement drawings for an expansion to happen, not knowing today what that would look like, whether it would be a 50% expansion, 100%, or taking it all the way to the size that we had previously evaluated at 50,000 tons per day. We've left that open, but the opportunity is there. So, the thing that I think intrigues and excites people who are looking at the project is tremendous economics, very reasonable costs. I mean, we're in the kind of the center of the pack in Australia with regards to, looking at operating companies with less than 200,000 ounces of gold per year production on all-in sustaining costs. And we've got tremendous, because of the size of the project, we've got tremendous expansion opportunity.
Well, I think we'll wrap it up there. It's a great point to end it on, is that because you've scaled back the feasibility study, you still have all that expansion there as further upside blue sky as you could to continue to develop the project and even bolt on or grow operations over time. So it gives anybody looking at the project that intriguing upside of growth in the future despite the positive economics that are already in place. And yeah, when you add the metal sensitivities on to current spot prices, you can see how the company really shines. So definitely a project we'll keep following along with here at the KE Report. And for those of you listening in, if you want to get more information, definitely click on the link down in the show notes. It takes you straight over to the Vista Gold website, right to their news section where you can follow along with news updates. But pull up the corporate presentation, take a deep dive. And if you have any questions for Fred, definitely email them in to Corey or I. We'll get those over and address those in future discussions. Fred, keep us posted as you get more updates. We'll get you back on. And as always, looking forward to our next conversation.
Likewise. Thanks.